China's concerns over Bitcoin mining are now moot, says Luxor Report. As China's hold on the industry loosens, Bitcoin's hash rate is anticipated to soar towards its all-time highs, potentially improving mining profitability. While there is still fear, uncertainty, and doubt, FUD, that China would take control of cryptocurrencies, this is no longer relevant, according to recent research by Luxor Technologies. According to the research, crypto miners may anticipate the hash rate to rise to over 185 exahashes per second in the fourth quarter. According to Glassnode, this is a 33% increase over the hash rate recorded on October 7, 139 exahashes per second. Total computing power allocated to protecting new data blocks on the distributed ledger is expressed as a hash rate on the Bitcoin blockchain. Bitcoin's hash rate and price have recovered since China's broad ban in July, thanks to miners outside of the nation seeing a chance to reclaim their market share. Luxor claimed in its study that hash rate was dispersed throughout the world, with North America potentially becoming the next main center. In addition, China's historic prohibition has given a rare opportunity, a second chance for shelved investors who never believed it would be feasible to enter this business, said the statement. The overall trend in Bitcoin mining is upward. Not just Luxor believes that hash rates will rise in 2021, but many others do as well. The digital asset finance company Bituta estimates that even more hash power will be generated by the end of the year. Due to China's mining restriction, the hash rate assumption was raised to 198 exahashes per second from the previously stated 145 exahashes. A research study given to CoinDesk by Wall Street firm B. Riley Securities predicts that in 2022 and 2023, Bitcoin network hash rates would rise to 200 and 235 exahashes per second, respectively. Miners will have a more challenging time in the fourth quarter due to increased difficulty. This variable gauge dynamically adjusts within the Bitcoin blockchain code to keep the network functioning properly. The analysis predicts gradual increases in difficulty, not the enormous spikes seen in the second and third quarters. A higher difficulty level means lesser income for miners as new Bitcoin becomes harder to find for mining equipment. Moreover, according to Luxor's research, prices for high-cost ASIC miners, or machines built explicitly for mining digital currencies, are set to rise in the fourth quarter to record highs. Transaction income from fees will more than double, while the hash price will reach a new annual high, but it will remain below the critical threshold of 50 cents per terahash throughout this period. With hash rate and Bitcoin prices rising, publicly listed crypto miners' shares have done well this year. When the mining companies start disclosing their profits later this year, it will be clear how much of this positive mood will hold for the stock prices. Crypto miners Marathon Digital Holdings Incorporated and Hut 8 Mining Corporation had their shares rise by 259% and 242%, respectively. At the same time, Riot Blockchain Incorporated and Hive Blockchain Technologies Limited saw their shares rise by 57% and 50%, respectively.